Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3Live. Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. I'm going to breeze right through this because what looked like it could have been a little bit of a off day wound up being just another day in the life of this uptrend that's been in place. You know, we've talked about being in portfolio. We've been talked about a portfolio approach, versus tactical approach. We've talked about holding multiple positions depending where we are in the market. And all of a sudden, I find myself with only like 4 longs, 1 short, and being a lot more tactical versus when I think I had somewhere between 10 to 12 positions on average since the November 16th low, as high as 15. So it's okay to switch back into more of a neutral approach if you're feeling like you're a little bit, prone to some type of volatility or pullback or whatever it is. But what you don't want to do is just fight the trend and abandon what's been working for the course of the past 2 months or so. So you just, look at the chart here. You'll see that the spiders, here is that gap up to start the year. Here is that sideways digestion. This was the time to accumulate the best acting stocks, that were showing relative strength. I believe this was the time when we broke above 1474, where I probably peaked out in positions. And then from there, it's been a really nice trim and trail. Okay, few days in here of choppiness, where here we tested the 8-day, and then just gapped up and closed at highs, and then we gapped down, closed below the 8-day. First time I think I probably went back to a bit of neutral, and then we gapped up and continued. So if you get into like a neutral versus just leaning and shorting every pull-in, you're fine, because once you regroup, you can put on some positions because the positions in the rotation has been changing. But overall, still above the 8-day, still trending, and there's no reason to abandon ship. Just maybe put a life preserver on just in case. So we want to talk about strong stocks. There's a lot of stocks that still look good, and some that are showing some some chips in their armor, so to speak. So you look here, Netflix, an animal. Okay, look at this. Ever since the earnings, here's your gap up, traded above the earnings high, and pow, had some back and forth in here, traded above it, and then what did it do? It stair-stepped higher. Okay, what did it do? It flagged once again. And then there, today closing the highs right near the previous highs, and something that guys staying with this trend are making money with. Another strong stock, LinkedIn, hasn't been able to give us, a real pullback. So for me, I've been just avoiding it ever since the call spread into earnings. Here is your big gap up after earnings. Okay, then I continued. It was a bit of a long above the earnings high, which was 151.89, and now it's consolidating and looks as if it's going to take out this area. So all in all, this is really strong. A stock that I don't think people want it to be strong. If you think about Amazon really got a lot of people good, including me. All right, here was that earnings 284. This is where it failed to break through. It was a churny, monotonous move lower with some choppiness. Here's where it tried to close below the 8-day, couldn't. I mean the 50, I'm sorry. And then it closed below. Remember that? I took it home short, and then it gapped up. And then I thank goodness it gapped up, because I got out of the way, because it saved me from this day. There were some people that traded this long. Congratulations, it closed near the highs of the day. But to me, it was a little bit hard to see. All in all, I guess you could say that within the scheme of this move since November, if you want to use your Fibonacci retracement numbers, because people were saying, oh, you know what, it really hasn't pulled back that much. If you want to look from this low all the way up to where it peaked, it didn't even pull in 50%. So it still showed some strength. And if you go way back when, there's a ton of commitment. So anyway, I haven't had much success in Amazon, but to at least if you were short when it started to break above this, hopefully you didn't get stubborn and just roll it up, because that's a way you could get put out of business versus a small little paper cut. As far as Apple, today, not much action. There was a decent trade early in the morning. We talked about this being your pivot. Reason being because we didn't know whether or not it would continue to the downside or it would be a two-way trade. You look here, 467.74. Early on, it traded through it from the short side. I didn't, take that trade. Some guys did as they looked for continuation, and it did go down to as low as 463-ish. And we talked about 462 to 466 or somewhere around there as a level that if this was any good, it should hold. And for now, it somewhat held it. And for a day trade, if you come back to me, if you were listening to Sperling on the virtual trade floor when it was down 3 or 4, he had a nice cash flow move, went from down 3 to up 4 within, 4 minutes. And then it kind of held higher. That's when I got involved just for a cash flow trade and then went into resistance. And I'm like, I'm done trading it. And I don't think I traded it since maybe 11:30. So this is a spot right now in the stock where you just pick and choose your battle, maybe make a little long, little short, and then see if it could hold above today's low for a little bit. And then maybe as we get closer to the shareholder meeting, perhaps, you take a look back at the stock here, this downtrend that's been controlling the stock since 700 at some point perhaps gets taken out. It failed here, it failed there, this is your peak. So at this point, in order for this to even have a chance of being more than just a nice trade like we had last week, it's going to have to go sideways a little bit, and then this downtrend moves lower, and then who knows, maybe finally it breaks it and then retraces something a bit more meaningful. But for right now, I still think Apple has a lot to prove. As far as BMW on the weaker side, some guys had some nice success shorting this. We talked about this huge gap in the stock. If no one comes in and buys it after a big gap down saying it looks cheap, from 96 down to below 80, it could continue. And then this is when it started to resolve to the downside where some people got short, and then it just continued through the pivot and nice 3-day trade to the short side. So if you wanted something to short, at least this was tactical. Big gap down, couldn't get filled. Here's your continuation. Okay, another stock that we talked about today that had a similar setup, if you come back to me, was Baidu. Okay, Baidu, similar setup, gap down. Looked a tiny bit stronger, but it didn't give you the follow through like BMW. It gave you a quick, cute little trade to the short side and then had no movement. So if you look at Baidu, it tried to go below this level, but then it got a little bit stronger and it held in there. So for this one, not as weak. There could be a bigger trade in here at some particular point, and it might even be to the upside if it were to clear this trend line. Big gap here. Search, China, the whole spiel. Typically, this, I would think, stays in the game. It's probably one of the most quality stocks out there in China, so we'll see. But below 95.31, it was a decent scalp short, and then when it went positive, I just got away from it. So that was just tactical. You always, as an active trader with many different styles, you can have multiple positions in a portfolio approach that could pay you when we're trending, and then at certain points you could be a bit more tactical and use your active trader skills just to make cash flow, almost like we did with the banks yesterday. Banks, if you were trimming it and trailing it the whole way up, great, and then when you saw that type pattern, you could have added for cash flow, or you could have just been flatted and traded it through that price point like a lot of the traders on the floor that don't carry positions overnight or whatnot and make some money there. So when you want a little risk off because you feel like the market's being a bit frothy, no big deal. Take the risk off because you probably learned enough tactics to make money intraday. All right, as far as some of those banks, Citigroup, no big deal. Okay, I actually sold mine today. I haven't been swinging this thing from here like I've been doing with Bank of America. So for this, I was long here, added here, and then as it was positive, I tweeted saying I'm done with Citigroup. So now I'll wait for it to go sideways and see if it'll be worthy of another buy in the coming sessions. Bank of America, no big deal. It too had a bit of a retracement. Also said that I was selling a little bit into the strength, or it was up like at 12.30 and change, but I'm holding this one because I've seen this before, and I'm holding this for a bigger trade. So here's your tier 1, here's your tier 2, sell some into strength. It opened up a little bit today, sell a little bit more, and then get back to comfortable levels where it could just go sideways for a while and potentially do some work above this prior breakout before continuing to what we see on the weekly chart, which could be a lot higher. We've been talking about 14 to 16 on the weekly chart, and I don't see why there's any reason why that can't happen. But again, there's a long year in front of us, so we can continue to use a tier system. As far as JP Morgan, so to speak, I would say this is probably since the rally started in November, this was one of the biggest wide range bar down days, and I don't want to micromanage or micro scalp people, but I'm just saying, you look at all these bars here all the way down, and you really don't have one wide range bar that closed in the bottom 20% of the range. So what does that mean? Not that much, but if you wanted to lighten up, if you've been riding this trend above the 8-day, perhaps you get a little bit of a pullback to the 21-day, which would be nice because that would get a guy like myself the opportunity to buy a pullback. But as of now, that hasn't happened yet, except for right around here, which would be nice if it happened again, because guys are looking for it. You go to your weekly chart, and I'd say they came in and it didn't close green, so it's still fine. But it cleared a bigger resistance. Remember this resistance here? So it'd be nice to see it come back and retest it. So we'll see. It hasn't happened yet. So as far as Goldman also. Really just keeps trending and trending and trending, and anytime it looks as if it might, I don't know who had this here then, anytime it looks like it might come back down to this 8-day, it just hangs in there and hangs really tough. I wish I had the stock that I had when it cleared this 121 right here, but you could say that about a lot of things right now. As far as gold, not much to say. Still hovering at the bottom end of this range, still looking more bearish versus bullish. This is when it was getting tight. I was cheating to the upside, didn't happen, wound up going to the downside. It's getting close to bigger support. So I would say if you're a macro investor in gold, you better be careful if it breaks this 158.5, because there's really a gap that gets filled, and that's the last point of reference until you get to bigger support down here around 150 and change. And if you want to be short it, be my guest. I'm just going to avoid it. Facebook, very funny. This stock, again, I've been saying a lot that the highs of the year right here are not in, okay? But we have a lot of year left. So finally, after riding a really nice trend into the earnings, we got chopped up on this pullback. And then yesterday, as it was about to go positive, it got another downgrade. So that's what pretty much just frustrated the heck out of me, and I just got out of it and said I'm just going to wait. And then today it bounced a little bit, but I don't think you missed anything if you got out of it. If you've been accumulating it, in this area, it's a decent spot. For me, I guess I'm going to wait till we see maybe this descending channel here, perhaps break to the upside, and then I would get back involved and then trail it. But I traded this wrong. Right here is where I didn't see the relative weakness, and then this 2-day move kind of got me spun around, and then you had this flag move, and then I just got out of it because of my entries. Entries and exits matter. We say that all the time, and mine were poor in this end of it. This was a really nice entry, nice swing trade, then another nice entry that we rode all the way up to here, but right in here, it didn't serve me well. So anyway, I do think that if we could start to clear maybe today's high tomorrow, I'd get back involved for what could be, it's moved back up to highs, and again, I don't think the highs of the year are in there. And GE, congratulations to guys that took it. That was a nice surprise with the news with GE. It looked set up, ready for news. So sometimes when you do the right trade, you get rewarded. And this has been the right trade since earnings. Lots of different strategies in GE, which we mentioned. You took a call spread right around here, right into earnings, because I didn't want to have the risk of earnings, which was a nice trade, and then converted the call spread into equity. And then here was a nice flag pattern. Remember buying it above 22.20, and then it was perking up as the financials were strong. So it made sense to add yesterday, not knowing the news was going to come out, but somebody obviously did. That's why I was perking up, and then he got paid. So I sold some into the strength. It's now above this prior pivot. And congratulations if you stayed with it. Who would have thought that an old dinosaur company like GE would have been such a profitable, nice, trending trade with multiple entries? Some people saw me get long the GM for tomorrow's earnings. Just did a small call strategy because the chart looks decent. It's my hunch is that it could have some good numbers, and if the numbers are good, it could see the old highs here. Has a nice wedge pattern, so it's going to give one way or another. It's not expecting great numbers. You still have this big gap up, and we'll see. So, when I buy calls into earnings, right away I write it off in my head as a zero, because 90% of options you buy that aren't selling calls versus positions go worthless. So we'll see what happens here. LinkedIn worked out well. GE worked out well. Apple didn't. So let's see if we could be, three good, one bad. Because during earnings season, you get an event, and if you're right on the event and you do the proper strategy, you can make some extra money. but never risk more than what a normal down day would be, or a bad trade in something that didn't work out. Don't try and go, I'm going to make my whole month on this thing, because you do that, you're going to wind up losing and you're going to wind up having to make it back. So always, swing for a triple, but risk a single when you go with an option trade, especially when it's flip a coin for earnings. So with all that said, it's Wednesday, market's still trending. I would say at this point of the rally, it's not the biggest deal if you go more into neutral and you have less positions on that you had a week or two ago. It's no big deal if you bring down your tiers from tier 2 to tier 3 to tier 1. But it is a big deal if you're just shorting every move and you have short in the brain and you're shorting and getting beat up and hurt and missing out on the opportunity of what's been in front of you, since this rally began on November 16th, or even back from June 4th, or back to that October 4th, or even back to 2009. And overall, if you had a macro plan with the Dow up near 14,000 and S&P, 3-4% off historic highs, it didn't matter what took place if you had your plan and you stuck with it. You just have to know your time frame. And there could be multiple time frames. You could have different accounts. There's lots of different ways to skin a cat. My sweet spot is the intermediate trend, and that trend right now is still up. So until that trend changes in a drastic method, I'm going to try and stick with it and find good setups. Have a great night.